Hello there, welcome to David's Investment Analysis channel. And today I'm very excited because I'll be talking about a stock that I see a lot of potential. It's a very small company, perhaps not very well known, so I'm super excited. And the company I'll be discussing today will be PHO. No, not PHO, but it is the ticker symbol PHO. It's Photon Control. It's traded on the Toronto Stock Exchange. I'll first talk about the company, what they do, how they earn income, and then I'll follow up with a quantitative analysis looking at their financials and valuations. Then I'll follow up with some positive and negatives on the qualitative side of things. And then I'll conclude on whether I own the stock myself and what I think about it at its current price. If you haven't yet, please like, share, and subscribe. And if you have any other companies you would like me to cover in the future, please leave it in the comments below. Photon Control designs, manufactures, and distributes a wide range of optical sensors and systems to measure temperature and position. These products improve performance and enable innovation for its customers and are used in the semiconductor and other high technology industries. Photon Control's high-quality products provide industry-leading accuracy, reliability, and quality in the most extreme conditions, and are backed by a team of experts providing a variety of on-site and remote services including custom design, installation, training, and support. The company is headquartered in a manufacturing facility in Vancouver, BC, Canada, and has sales and engineering offices in California and has sales distribution network across the globe. Photon Control is listed on the Toronto Stock Exchange with the ticker PHO. So in simpler terms, they sell optical sensors and systems to semiconductor manufacturers to help improve their process. Now let's look at some other numbers. As you can see here, revenues increased every year since 2012 with the exception of 2019, with growth rates between 7% and 66%. Gross margins have been generally increasing from high 30s to mid 50s. Net income and earnings per share has somewhat been bumpy. Shares outstanding has been increasing incrementally between 2012 and 2017, and it's likely due to exercising of options. However, you see that it has been decreasing in 2018 and 2019. And when management decides to repurchase its shares outstanding, this is an indication that management feels that the stock price is undervalued, and it is a positive indicator, as management should know best what the company is really worth. Looking at its balance sheet, they have tons of cash, no debt. The cash per share is 39 cents. This means that for the price you're paying for the stock, 39 cents of it is in cash. Balance sheet looks fantastic. So the numbers don't look that outstanding other than the balance sheet. And the company share price already went up over 147% from its low on March 17th. So why am I so bullish about this company? Well, it's because of the first quarter fiscal 2020 earnings. Now let's look at it. The revenue more than doubled in the first quarter 2020 results. Their operating income more than 8 times, and their net income more than 94 times. But if we look closer, there is a huge foreign exchange gain of 2.7 million for the quarter. And if we assume this is zero, their net income still went up more than 56 times. Furthermore, the press release in Q1 also said that the order backlog was a record of 30.9 million at March 31st, 2020, compared to 20.5 million as of December 31st, 2019. Order backlog is defined as the value of the sales orders scheduled to be shipped in the next 6 months. These are pretty impressive numbers. Now let's look at some of the valuation. Now looking at its current valuation comparing it to historical average, we can see that most of the metrics are below its 5-year historical average. And now let's compare it to some of the competitors like Lam Research and Applied Materials. The red highlighted cells means that they are below group's average, and the green cells means that they are above the group's average. When we compare it to its competitors Lam Research and Applied Materials, Photon Control has a reasonable valuation. And because I don't think Yahoo Finance updated the analyst expectations, so the PEG ratio is not a really good indicator right now. Although Photon Control's return on asset and equity is below the group, their profit and operating margin is above the group. Now let's look at some of the stock chart. Now looking at the stock chart from the last year, the group has generally performed very well, up between 44% to 65%, with Photon Control lagging. However, on a 6-month chart, Photon Control has significantly outperformed the group, up 62% compared to the group up or down, let's say 2% to 3%. This is because the stock price popped after the Q1 results. And if you look at where it was on March 18, 2020, it was at 70 cents. So the stock price of Photon Control is actually up over 147% now. Now let's get on to the qualitative analysis. Some positive. They just made an acquisition of Micronar assets that included intellectual property, including trademarks and 2 patents. This helps broaden and diversify Photon Control's product offerings to different customers, and it's very positive because the sales of Photon Control is currently really concentrated. It's also good to note that the CEO actually hinted several times that they are looking to do more acquisitions that are creative and synergistic to Photon Control. Next is a new and more experienced CFO. When I first saw the heading Photon Control announces appointment of CFO, I was actually very nervous because I thought after such a great earnings result, I didn't want anything to change. But after further readings on the details, I noticed that the new CFO is actually very experienced. So overall, I think this is a positive for the business. Another positive qualitative factor is that there is growth in several key markets that they're in. It will drive growing demand for Photon Control's products, and some of these markets include autonomous driving, 5G, big data, Internet of Things, artificial intelligence, and these are huge markets, and I see a lot of opportunity for Photon Control. And there is an opportunity for Photon Control to expand its fiber optic sensors into other markets, such as flat panel display and medical. Photon Control has competitive advantage on their proprietary technology. They can sense temperature within plus minus 0.25 degrees Celsius, which improves process control, and this is particularly important to ensure chips that are being made is consistent. Another positive factor is Photon's growth strategy. They plan to drive market leadership in semiconductors, expand markets with new products, and create growth opportunities that go beyond. I was kind of curious on whether they were hiring, so I actually went on their website, and I was actually surprised to see that there's 10 openings. This would be a positive factor, especially during this time of uncertainty during the global health issue. So what are some of the negative qualitative factors? So looking closely at their financial statements and note disclosure, in Note 10, we can see that the sales in both Asia and US has grown substantially in Q1 fiscal 2020. But what I'm concerned about is that the company's 3 largest customers accounted for 84% of the company's total sales. So if one of them decides not to purchase from the company, their sales would drop dramatically. Per earnings call, even though the Q1 revenue has increased significantly, but Q1 revenue was accelerated because customers were worried about the supply chain disruptions and contributed about $2 million recognized earlier than expected. Although the global health issue had minimal impact on Photon Control so far, but there is still possibility that their business may be impacted in the future. Also, the global health issue perhaps did also lead to the higher backlog, so perhaps later into the year you would have less backlog, so that's another concern. Something to also note is the semiconductor industry is cyclical business, so that there are periods where the market is slow, and perhaps that's what happened last year with Photon Control sales. McKinsey and Company actually predicted the semiconductor market will decline between 5 and 15%, and this would impact Photon Control sales. Conclusion: the stock price is currently trading at $1.73, and in my opinion, I still think it is a buy even after going up over 147% since its low in March 18th. And here are some of the reasons. Valuation. Assuming revenue is $14 million for the next 3 quarters and taking a 20% profit margin on it, it would be approximately 8 cents per share. Plus adjusted per share in the Q1 removing FX, approximately 4 cents. This gives us about 12 cents earnings per share. And if you put a very conservative multiple on it, say 15, you would get approximately $1.80 as its price. But if we just change the PE multiple to 20, you would get $2.40. And I believe these are very conservative valuations. The next reason is because they have a very strong balance sheet. They have $41 million in cash, and that is almost 3 times their total liabilities. And management has hinted several times that they are willing to spend it on acquisitions to grow its business. I also see a lot of growth in future markets like 5G, big data, and Internet of Things that will drive Photon Control sales. They also have a very strong competitive advantage on their proprietary technology, where a lot of customers rely on. And the next reason is perhaps there could be a buyout target. Catamaran, Sandvine, and Avigilon are all the companies I held in the past that were acquired. And something they have in common is that they have solid balance sheet with lots of cash and a good business. I'm not saying Photon Control will get acquired, but I think there is a chance. Having said all that, please do keep in mind that this is a small company with a market cap of approximately $180 million, so the stock price can be very volatile. Something else to also keep in mind is that 3 of their largest customers make up 84% of the revenue. And if the company loses one of them, that would impact the business significantly. They can still be impacted because of the global health issue, either by their supply chain or demand in the products by the customers. Photon Control is a cyclical business and is dependent on the economy. The revenues and earnings can be very lumpy. Disclosure: I've owned this stock for some time now and it's about 3% of my portfolio. I haven't decided whether I'll be adding to this position yet, perhaps on a significant down day. Until then, I'll probably just hang on to it and wait till next quarterly results and get more clarity to confirm my thesis on this position. And that's it for now. And if you haven't yet, please like, share, and subscribe. The next video I'll be working on is something different. And if you do not want to miss it, please click the bell notification after subscribing. Thank you for watching. See you next time.